All right. Hey, good morning, everyone, and welcome. Thank you for giving us a few minutes of your time here this morning. I'm going to jump right into it, and today we will have the pleasure of hearing from Bob Temple, who is the CEO of Wind River Grain out in Garden City. He's going to go over the cash markets for us. He's got a much firmer grasp on the intricacies of that market than anybody that I've ever met, and so we're really grateful for his time and insight this morning. So as we walk through, I'll start with an overview, and we'll get some pictures in our heads of the charts really quick, and then I'll just turn it over to Bob and we'll listen. If you have questions for Bob, use the chat function, and we'll do our best to monitor them here and try to get them answered. Okay, so general overview. Let's start with Ukraine. So far, the news, from what I can tell, is the war really rages on, even though there is talk of peace. Some rumors are circulating that the governments are getting more concrete on their negotiations and that a resolution could be coming in the next few days. That's pretty similar rhetoric to what we've been hearing the last 2 weeks, really. And even through the negotiation, the Russian army just kind of takes more territory and strengthens their stronghold in all the positions. So I think it's fair to say that that Russia is getting what they want out of this deal. Now, I don't know what that means necessarily, other than some of the commentators that I'm reading are debating how many acres the Ukrainian farmers are going to be able to plant in their corn crop, and I'm hearing estimates from 0 to 100%. But I really think that the best question isn't whether they'll get it planted. The question really is, will they be able to get it raised? And because that's more of an infrastructure question and a logistics question. And I think the argument that it would be difficult to assume timely delivery of your fertilizer and your inputs, while if you're having to go around blown out bridges and and potentially have to skirt around where somebody is or some territory that's being held by an enemy force. I think that causes problems at best, right? So so let's just say that 25% of their crop isn't going to come to market, and I think that's a decent number. I don't know, could be 80%, could be 50%. So let's just guess that 25% can't come. That's 10 million metric tons that can't make it to market, and that's a big deal for the rest of the world to absorb. So if you're looking at whether to be bullish or bearish, you got to kind of keep the big picture fundamentals in mind. And this is what we talked about last week, where we can see supply overwhelming the market and actually getting to a point where we can see lower prices. But before that can happen, we've got to get it planted, we've got to get it pollinated, which means we've got to have weather to support it. So if you're looking at where the supply is going to come from, it's South America, it's here, and it's in Ukraine. And Ukraine's got issues. South America is planting. Their weather forecast isn't that great, and it's questionable what their crop's going to be. It's certainly not a given yet, because their forecast just isn't that isn't that wonderful for record yields. And so that really puts pressure on us to get the acreage planted and grown. And so until we know what that acreage number is, which we won't know until May at earliest, right? We'll get an idea here at the end of March, and then the market will start to digest and really start the acreage war. So I think that what that means is you've got to look for this market to be underpinned with strength until those things materialize. And I think that happens between now and July, but who knows? But I do believe that with the technical setups that we have and with the fundamental backdrop, that if the weather does turn harsher here or in South America, our markets can get explosive really, really quickly because we just don't have enough. We don't have any other options because there's no new supply coming, and so you have to slow down demand. Oil can break all this stuff. So if if you're looking for what to look at, I would look at price action. I wouldn't look at oil. I wouldn't look at stock markets. I wouldn't look at the Fed. I wouldn't look at any of that stuff. I would just look at the price action of corn because it's going to digest all that information. It's going to digest it quickly, efficiently, and the conclusion to the corn market's going to be shown right here on these screens, and we're going to see exactly what the market thinks of it, and you're going to get to see that in real time. So I wouldn't get ahead of yourself and try to outguess something that is unpredictable, like what will crude oil prices do, who will win in Ukraine, and all that stuff. I would just look at price, and we'll be watching it too. And when it looks like it's going to break, we're going to jump all over it. All right. So as far as soybeans go, this is May soybeans. Really, there's absolutely no change from anything we talked about last week, which this was last week right here. So no change. We're looking higher. This looks to be a consolidation before we pop up and out of here. I think that beans have to be well supported, and the downside is minimal at this point. I see no difference between that and corn. Come on, chart. There we go. That and corn. Again, this is last week right here. Absolutely no change. We've just consolidated 10, 15 cents either side of where we were last Wednesday. We've broken no major support or resistance. All we've done is chop sideways and allow this overbought condition to work itself out down to the zero lines, which sets up a continuation strategy. People like to look at oscillators. You buy them when they reach the zero line. As consolidation occurs, zero line gets approached. That's an entry strategy for most algorithms. So I would look for this consolidation to favor continuation, mostly because we don't solve any of our problems with a knee-jerk move to the downside. Unless we start to feel like we're slowing demand down, we don't solve problems with a knee-jerk reaction to the downside. We got to solve this problem with higher prices, not lower. So I see nothing to warrant any bearish positions at this point in corn. At best, you got to be patient. If you go out to new crop, where's my new crop chart? I just had it up here a second ago. This is the wrong one. ZCEZ22. If we look at new crop, it looks really good as well. We have no divergences. We have no signs of weakness on this chart. I think you got to keep looking higher on it as well. And it really doesn't make a lot of sense to me to buy to discount the front versus the back, given the supply situation. So I think most of the movement's going to stay in the front, and the back is just going to stay supported until we get better handle on acreage. And okay, before I turn it over to Bob, let's start into wheat. Wheat is just crazy, right? The volatility is insane. You'll sit here and watch wheat trade, and it basically won't trade at all. It's trading one contract at a time, sometimes two, sometimes three, and then 30 will trade and the price will move 30 cents with it. It's just got these air pockets in it that create huge price expanse, and they create it makes it untradeable. But if you look at it from a chart perspective, it's actually pretty orderly, right? What did we do? We blew higher into a big wave 3 move. We had a sharp, steep correction that was perfectly in line with the size and proportion of the move that came that preceded it. We've now had a reversal bar, and we've consolidated for a couple of days, and look what we've done. We've reworked ourselves right down into the buy zone. So I think wheat is technically set up for higher prices or consolidation. And I think it's going to, even with resolution, we still don't know the extent of damages. So whether the Ukrainians can raise their crop and get it moved to market quickly is still going to be underpinning to this thing for a while. I don't see anything that's going to change that immediately. So with that, I'm going to turn it over to Bob and let him talk about the cash markets. And Bob, we really appreciate your time here this morning. I'm going to shut up and turn it over to you. And guys, I hope you realize that this is as good of a grain marketer and trader as you're ever going to hear from. So I would get your pens out and take notes. Bob?
Thanks, Tim. Can you guys hear me okay?
Yes, you're loud and clear, Bob.
Okay. So I appreciate Tim's introduction. I'm not sure that I probably live up to all those, but the wheat market right now on the cash side is really hard to call. The biggest thing we're seeing in the overall market is just what's happened in the freight market. So from a Wind River standpoint, we're shipping 110 to 115 cars at a time. The export market, has just not been there. We haven't been competitive. What we have seen is strong demand from the flour mills in California, and then in the Wichita market, and also the gluten plants. So in Kansas, it's been a very strong market. We've seen that all the way through, and we're still shipping very strong, at least through May. With what happened the last 10 days, everybody just kind of pulled back, and they haven't showed much of any bids. We look at it, as you look at the cash market, you got big inverses that we haven't seen in the wheat market for a long time. So as a hedger, as most co-ops and Wind River are, what you see is everybody's trying to get rid of wheat ahead of this inverse. So we've seen pressure on the basis on the front end, as there's still a big cash long out in the country. So that'll continue to have pressure on the basis on the front end. But I do think we'll see some demand come back from the mills as we get back into probably June. But for the most part, they're covered through May. The gluten plants are kind of the same way, but they're going to be hand to mouth because this thing's gotten so volatile. I guess the thing that as I listen to Tim all the time on things, in which I'm still a producer as well, I think the opportunity is selling into the strength and the futures, and then really waiting for the basis to see what happens as things evolve in the Ukraine. So, I guess overall we're really fortunate in Kansas because of all the demand we have domestically. So we're really well positioned. As you guys have seen with fuel costs and everything, we've got truck fuel surcharges going in place, so you can't haul it a long ways. The same thing on the railroads, they continue to go up. So what's happening in all that is you're keeping more wheat setting out here because they just can't physically move it. So for example, today, if we wanted to go and buy shuttle freight, let's just say we wanted to go to the Gulf today, we get the pleasure of paying $2,200 a car for that today. Okay, that's the bid side. That's 59 cents a bushel. The offer side is $3,500 a car, so that's 94 cents a bushel. So you can see what's happening is that we physically can't ship wheat out right now to really California or to the Gulf at this point. So it's going to be sitting here on the interior, looking for some domestic markets, and Wichita, where they're going to continue to need stuff. And the gluten plants will still have those bids, but it is going to put pressure on the basis on the front end, and the hedger is going to try to figure out what he can do as far as rolling wheat forward. We still anticipate there's more wheat sitting in the country than what we saw last week. Well, we'll know more about that when the next report comes out, as they come up with the end of March report. So, but I guess, overall, the cash market is just going to be, or the basis levels are going to be pretty, I guess, sloppy on the front end here, and then we think they'll come back in June.
So from a marketing standpoint, Bob, um, are you thinking HTAs are a good bet for farmers to hedge today?
Yeah, I think that's the best bet right now. I guess hedge to rise with some kind of minimum price contract, because you and I both don't know our min max. We just don't know where this thing's going with the volatility. And we're the residual supplier of both corn and wheat to the world market. I guess that's another thing I'd bring up, is that China's hanging on to 50% of the total wheat stocks in the world and 70% of the corn stocks in the world. If you can believe what those numbers really are. But I mean, when you look at the world market and how much they're hanging on to, then you also look and say, okay, if you look at exporters in the world today on wheat, you've got Russia is number 2 and you got Ukraine as number 4. So, you're sitting there with 2 of your biggest exporters that we're not sure exactly what's going to happen. So, with so much volatility, that's what we're seeing in the wheat market right now, because the world doesn't know how big the Ukraine crop's going to be now, what's going to happen in the Black Sea. And, if you have a vessel, you can't really get into the Black Sea because you can't even get insurance on that. So that's what's so disruptive in this whole market. And, we'll have to see what happens. Now, the other thing we're looking at all this is that from a let's just say a space situation, when we get into harvest, we could see that the co-ops and everybody's not going to be bidding off the July. They might be bidding off the D's because there's such a big inverse. They're going to try not to bid off the July with this huge inverse. So that's going to be different for everybody. So you might, when you go to market gray and you go to your local co-op, they might say, I'm not bidding off the July. I'm clear up to the D's, because they've just never experienced these kind of inverses. You got a, let's see, what is it, a May to Sep right now, 48-cent inverse. You got a July to D's, it's a 62-cent inverse. This is unheard of with what we're seeing. So that's what will keep pressure on a front end basis. But I guess I'm always looking at it from just a flat price standpoint. We can talk about basis a lot. So we've had really good basis levels last year. Protein was anywhere from 40 to 50 cents a point from 11 to 12. But at this point, things are changing on the front end just because of these inverses. And I don't know, with the group we have on here on inverses, and because I'm always a little careful talking so much about basis, because really when it gets down to it as producers, it's all about flat price. So right, whatever we can do to risk manage that flat price, and wait on the basis, to me, that's what we do today. So your ideas on a hedge to arrive or min max, to me, is the strongest thing at this point.
Okay, so that's wheat. Are your views on corn similar as far as basis and strategy and trading the inverse in that market as well?
Well, corn is, we've seen in Garden City, we do all the procurement for the ethanol plant, plus some other feed yards and end users. So what we've seen on basis over the last 10 days is we went from buying corn at call 80 over, we're clear down to 60 over now. So there's been a lot of pressure again just because of these inverses. And we think those will continue to stay here for a bit. But then as you get into June, July, we're going to have the tightest situation we've had since 14 and 15 on supply, especially in western Kansas. So it's going to be interesting. That market for June, July is trading around 105 to 120 over right now. We think that thing could even get stronger, and mainly because row replacement is going to be 150 over. So really your top side on basis in Garden City is more like 150 over. So today 105 over is a buy to us for June, July. And as you get into August, with it continue to have these high diesel rates in trucks, you're going to continue to see the delivered market continue to get stronger, in our opinion. So, I mean, you could actually, I think, see in August some feed yards or end users, I should say, that could actually run out of corn on certain days if they're not planting.
That's amazing. So I just pulled this corn chart back up, Bob, because to me, that's exactly what this thing is telling us. is is that the front months could really get explosive here, because end users have no choice but to come to the futures market to buy it, right? Um,
Well, the only thing I would say on that, Tim, is that on the front end, when we're saying April, May, there's still a pretty big hedge long. So I still think there's plenty of corn that people are trying to get rid of, and that's why we've seen this basis drop 20 cents, in the last 10 days. But I think that as that flushes out and they have to get rolled to the July and take their hit on that, and then look at things, I think that's what's going to continue to push the basis as you get into June, July, and August, just flat because of supply demand.
got it.
And I guess the other thing I would tell you a little bit on the Milo side, which really plays into all this, right now, this market, we're going to have all the Milo basically gone by the end of May. There won't be any Milo left in this whole area. I mean, it's been so strong, and that's also helped our basis. And that's all. The other thing is when you look at the end user standpoint, especially with feed yards, last year we could feed wheat, and there was some Milo here and there. The wheat will not feed. It's 130% the value of corn, and we don't see that changing. So you're going to be strictly down to corn replacement to go into the end user's hands. And from what we see right now, the end user's got about 20% coverage on for June, July, and about 5% for August, September. So the other thing I guess for producer to look at is if you are selling into that market, which I think makes a lot of sense. And, I think Tim adds a huge amount of value that I don't think people understand from a flat price standpoint. But you could be seeing corn, feed yards could be saying, hey, I'll take 25% moisture corn as soon as you can get it to us, because they're going to be looking for corn to end of August and September just to try to get by on a hand-to-mouth basis. And the basis is going to be very strong.
Okay. So I guess we can, if Bob, if it's okay, I can open it up for questions if anybody's got them. Otherwise, we'll let them chew on it, and they may send me some questions privately, and I can pass those on to you if you'd be willing to, as the day goes on. But does anybody have questions for Bob? No, I'm sure they will, Bob. I'm sure they'll reach out to me and ask some questions, and so I'll just pass those on to you.
Yes, that's fine.
Okay. And and again, truly, thank you for the time, and always appreciate your insight and wisdom. So, guys, that's a wrap for this week. We will talk to you again next Wednesday, and if things change and we do some damage or put some strength into these charts, we'll be quick to let you know. I hope you have a great week. We will talk to you next Wednesday.